Hello listeners and viewers, welcome to Kaduna State Ministry of Education Radio and TV e-learning program designed for our SS3 and other students staying at home due to the coronavirus pandemic. The present administration under the able leadership of His Excellency, Malam Nasir Ahmed El-Rufai, is positioned as always to ensure that under his leadership, our students are not left behind in all areas of human endeavors, especially education. Kaduna State is the center of learning. Therefore, we want to ensure that our students excel in their forthcoming examinations and beyond. Students and other learners at home are given this opportunity in order to continue learning, as education is a continuous process. Different subjects will be taught in this program to assist students to perform excellently in the forthcoming Senior School Certificate examination being conducted by NECO and WAEC as soon as schools reopen. Teachers making presentations will always provide their names and phone numbers during each presentation, and they can be contacted for questions, further explanations, and/or clarifications. The following numbers and contacts can also be reached for expression of any concern or observation: 090-865-00545 or 080-383-62072. Our website is www.education.kdsg.gov.ng. Our email education@kdsg.gov.ng or education.kdsg@gmail.com. Our YouTube channel, Ministry of Education, Kaduna State. Our Twitter handle @Kaduna_MOE. Or our Facebook page, Ministry of Education, Kaduna State. Stay safe, stay at home, and learn well. Thank you, happy listening, and happy viewing.
Hello students, my name is Mr. Jameson Yaro. Last week, we discussed on the topic single entry or incomplete record under financial account. Last week, we learned about single entry or incomplete records, where transactions are only recorded only but once. And these transactions were recorded by a novice or somebody who has no knowledge in accounting. So we discuss the meaning of single entry. We discuss the features as profit is ascertained by comparing the opening capital and closing capital. We also said real accounts and nominal accounts are not kept except personal accounts. We did not stop there. I went further to discuss with you the disadvantages of single entry, which I said why it has only disadvantages because there are unsorted information. So as a result of that, it will not have advantages, but rather disadvantages. And then we discuss some of these advantages as one, it does not conform at all or not in line with the principle of double entry. Two, the flexibility of double entry completely is lacking. And number three, it is difficult to obtain information or accurate information since the records are not complete. Then the fourth one and the last is it is difficult to prepare profit and loss account for the year. I said again, the computation of the profit and loss account is by preparing the opening capital and closing capital, then having calculated these two capitals, then the next account to be prepared to ascertain the net profit or net loss is the statement of profit and loss account. And there I gave you work or an assignment which you were expected to do and give me the feedback. Then finally, I told you, if we meet again, we are going to continue from where we stopped. And the topic to be discussed is conversion of single entry to double entry. Today, in continuation of the above topic I treated last week, we shall continue today with how single entry or incomplete records will be converted to double entry. This simply means that some of the transactions that were kept haphazardly will be converted to double entry before the preparation of the final accounts. The books necessary include 1. Statement of affairs, 2. Sales ledger control account, otherwise known as total debtors control account. And 3. We have purchases ledger control account, known also as creditors control account. Then we have assets and liabilities account. Then lastly, the nominal account. The trial balance may be extracted to show the accuracy of the postings, but there are no specific set of rules to be followed except a proper understanding of the principles of double entry. Accounting entries. That is, if you want to prepare accounting entries, these are some of the rules that must be put into consideration. 1. In preparing final accounts from incomplete records, the following operations must be followed. 1. Preparation of statement of affairs to calculate the capital. 2. Analysis of the cash book. 3. Reconstruct those accounts that are necessary to find figures not given in the question. Analysis of purchases and sales control account to get both purchases and sales respectively. 4. Preparation of other required working schedules, e.g. reconstruction of nominal accounts. 5. Preparation of trading profit and loss accounts. Then 6. Balance sheet. Example 1. We are now going to work one example so that you will be able to see how the preparation of the single entry is going to be done. Now, remember, I told you that it's going to be conversion from single entry to double entry. You can see how the question is kept anyhow. That is why I say haphazardly, anyhow, not based in line with the basic principles of double entry. If it were followed according to the principle of double entry, you would have seen a trial balance. The issue of converting a single entry to double entry doesn't arise. Let's look at the example and see what is going to happen. Abbas is in the bricks making business, and on 2nd January 2018, he had the following assets and liabilities. The assets are as follows: delivery van, 42,000; bricks making machine, 18,000; debtors, 7,000; bank, 10,000; stock, 1,500. Then liabilities, the only liability is creditors for expenses, 300 naira. He does not keep proper books of accounts, but the following records are available for the year ended 31st December 2018. That is on 2nd January 2018, we have 10,000. Receipt from debtors, 45,000. We have less payments. We total, that is the total of 10,000 and 4,000 gives the total here 14,500. Then less payments. Materials for brick making, 5,200. Repairs on van, 1,200. Then we have telephone, 500. Creditors for expenses, 300. Then the total balance, that is the total balance of these expenses, we are brought down here to the right hand side as 7,200. Then, so by subtracting this 7,200 from this total, the result is 7,300 naira. This is how the Abbas kept his account during the year. Then on 31st December 2018, debtors were owing 15,000 naira and closing balance was valued 500 naira. The following additional information was available. A, provision for the depreciation, delivery van 1,000, bricks laying machine 1,800. Then B, accrued telephone expenses 100 naira. Then C, provision for doubtful debts 350 naira. This is how he kept his account. Then required or prepare, we are starting with A, statement of affairs, B, trading profit and loss account for the year ended 31st December 2018. Then finally, the balance sheet as at that date. Conversion of single entry or incomplete record to double entry. Now, by preparing this is the solution. Number one, you have to prepare the first account statement, that is Abbas statement of affairs as at 31st December 2018. Let's go back to the question and see how we got this information to prepare this statement of affairs. Let's look at the question again. Now, this information from here are the ones that we use to prepare the statement of affairs. And the method of calculating capital is all these assets, 1, 2, 3, 4, 5 are assets, are recorded on the credit side. Then this one is the only liability, is recorded on the debit side. Then these assets are added, then subtract the 300 from the total. Gives us what you can see there from the statement of affairs. From the statement of affairs, so from the solution, total assets are added together, amounting to 78,500 naira. Already, we don't have the capital. Debtors and creditors is recorded, and the single liability. So the total here, 300 is subtracted from the total assets, gives us 78,500. 78,500. Now, this is where we will also prepare the sales control account. I say it has another name, total debtors control account. This is the opening balance. Let's go to the question again. This is the opening balance. How do we get this information? And this is the conversion. Move again. This is the conversion. Now, we have the opening balance of the cash. We have the closing balance of that same total debtors. Now here, this is the total, this is the amount that is found in the cash for that year. And at the end of the year, this is the total also left. This is for last year, opening capital. These two figures are for this year. This figure already is included in the 15,000 that has been collected. So we add the cash plus the closing capital and subtract the opening capital. The result gives us sales. Now we added this one. We got 19,500. Then 7,000 is subtracted from 19,500. The result is 12,500. Gives you the total sales. This sales was not in the question completely, but you are asked to prepare the final accounts. The sales completely was not in the question. So you have to convert this. That is the conversion. You are converting these items so as to get the amount of sales. Then it is only sales that was not there. So you prepare the sales account to find it out. Now you have prepared the statement of account to find the capital, prepare the sales ledger control account to find the total sales. Now you are going to prepare the trading, that is Abbas trading profit and loss account for the year ended 31st December 2018. Always, I have to tell you this. Whenever you are preparing your account, the heading must be taken into consideration first. And also the naira sign. We are using the horizontal method, which is the T account. Opening stock. Now we are going to look at where do we get the opening stock. Let's go back to the question. Opening stock is gotten from where? Yes. The opening stock is gotten from the total first assets. Then the closing stock, this is our closing stock, 500. 500, yes. So now we have the opening stock. The total purchases is 5,200. Opening stock, 1,500. We add opening stock, and the total amount gives us 6,700 naira. In accounting, this is the short form of cost of goods available for sales, and it is shortened as COGAS. Then, arriving at this one, we less the closing stock, which I have just indicated, 500 naira. By adding it, by lessing it, we arrive at 6,200 naira. So now, this COGS, which is COGS, in accounting it is known as cost of goods sold. Cost of goods sold. Or rather, cost of sales, otherwise. Now, having arrived at your COGS, then you go to the right-hand side. That adjustment, the conversion that you have done by the preparation of sales ledger control account and arrive at your sales account or sales amount, which is 12,500. It is now brought here. Now, this is the net sales, and this is the cost of goods sold. This one is sometimes translated, this is the selling price, and this is what the cost price. So now, 6,200 subtracted from 12,500. The result here is what? 6,300. So to balance the two sides, we add 6,200 plus 6,300. The total gives us 12,500. On the debit side, 12,500. Then this 6,300 represents our gross profit carried down. And in accounting, if we have gross profit carried down, we must have gross profit brought down. Now, 3,600. And I've told you, gross profit is that profit which expenses are yet to be deducted. Now, if you venture and touch this gross profit, you are spelling a bad omen for your business, because there are expenses that you have not what? You have not paid. So if you start spending this one, at the end of the day, A will come, B will come, C will come, bring my money, bring my money. Then already you have spent it. So don't touch the gross profit yet until all the expenses are paid. And from here, these are the expenses. We have repairs of van, 1,200. Then we have telephone. What Abbas has paid, he has paid 500. And what Abbas is supposed to pay for the whole year is 600. But he is owing 100 naira. So how much is he going to pay for the whole year? Now he is adding what he is owing with what he has paid for the whole year. He is going to pay 600 naira. But he is owing what? 100 naira. Then we have depreciation. Delivery van, 1,000. We are asked to charge 10% on 10,000. So this gives us what? 1,000. Then we have brake lane machine, 1,800. Then provision is 350 naira. These are the expenses that Abbas would pay. And these expenses are inside this profit, which is known as gross profit, 6,300. So having total all the expenses, and the expenses, the total was subtracted from 6,300. The balance left is 1,350 naira, which is the net profit. It's a bad omen. It's a bad omen for this business. The total of 6,300 and the net profit is 1,350. Is a bad omen for the business. So now, having done that one, Abbas balance sheet as at 31st December 2018. As we are aware, the trading and profit and loss account, these two accounts are separate, but they are always prepared at the same time. They are the one that will show the profit of the business. Will show the profit of what? Of the business. Will show the performance of the business within a period of time, which is usually 1 year. Then, he is now going to prepare his balance sheet. On the credit side, we have the delivery van. The delivery van was 42,000. And then depreciation was 1,000. With less depreciation, and the net book value of the delivery van is 41,000. Then brick lane machine, 18,000, and depreciation was less, 1,800. And then the net book value of brick lane machine is 16,200. We added the total fixed assets. The amount gives us 57,200. Then we have the current assets. The current assets, under the current assets, we have stock 500 naira. Debtors 15,000. Then we have 350,000 naira as bad debts. So in accounting, what actually we are going to collect as money, as actual cash, is what we are going to represent. This 350 is declared as bad. So as such, we subtract it. As such, we subtract it. And then we subtract it, and the net is 14,650. Then we have the cash in hand, which is 7,300. We add the total, gives us 22,450 naira. We add 22,450 naira plus 57,200 naira. It gives us 79,650 naira. Then on the credit side, we have the capital, which already we have calculated, which is 78,200. Then the net profit arrived from the profit and loss account is 1,350. We add it. The total gives us 79,550 naira. That 100 naira that he was owing, which was added, is the one that was brought here. We add it together with 79,550 naira. And the total gives us 79,650 naira. This one shows the financial position of the business. Now, this is where we are going to stop and hoping to continue from where we stop. But I will not leave you without giving you assignment. Attempt question 1. 19.4, page 199. Question 2, that is question 19.5, page 199 and 200 from Essential Financial Accounting by O.A. Longe and R.A. Kazim. I'm repeating again. Attempt questions 19.4, page 119 and 19.5, page 119 and 200 from Essential Financial Accounting by O.A. Longe and R.A. Kazim. Students, I believe, in fact, you have enjoyed the lessons. And then the reference is from Essential Financial Accounting by O.A. Longe and R.A. Kazim. My name, as a regular teacher, Mr. Jameson Yaro, and the number to contact me for anything regarding accounting, or if there are gray areas regarding to what I've just taught you now, you can contact me from this number, 090-469 090-4695-7453. I repeat again, 090-4695-7453. Thank you. Meet again. God bless you. Bye-bye.